This is an extension of my channel DIY Finance by Dhaval. You can watch these clips and get the full essence of my whole video. So hi everyone, welcome to DIY Fin Clips. Let's look at the basic details like AUM, which is around 4,400 crores, while the expense ratio is 0.39%. The benchmark index is Nifty Smallcap 250 TRI. Now let's look at the sector-wise allocation and compare it to its benchmark index. From the table, it is very clear that the fund is heavily invested in services and finance, followed by capital goods, material, chemicals, and healthcare. And when compared to its benchmark, its allocation is quite different than from its category. Now let's check the top holdings and portfolio allocation. As evident, Indian Hotels and Great Eastern Shipping are the main stocks of the service sector, whereas City Union Bank, Canfin Homes, Credit Access Grameen, and Indian Bank are from the financial sector. KEI and Schaeffler India are the main stocks of capital goods sector. Cera Sanitary Ware and VIP are the main stocks of the material sector. On checking the portfolio allocation, it is evident that the small cap shares form around 65% of the portfolio, whereas mid-cap shares form other 22% and rest 8% is allocated to large-cap stocks. Now let's look at the fund managers. Mr. Sri Datta Bhandalwardar has been managing the fund since October 2019. He has been joined by Mr. Ajay Khandelwal in December 2021. Now let's see how the fund performs on risk parameters. First, mean return, which is 38.12. Here, higher the value is better. Second, standard deviation, which in this case is 25.31. Here, lower the value is better. Third one, Sharpe ratio, which is 1.36. Here, higher the value is better. Fourth one, beta, which is 0.82. Here, lower the value is better. Fifth one, alpha. Here it is 13.73. Here, higher the value is better. Hence, after looking at all the risk parameters, we concluded that the fund's performance is quite good as compared to the benchmark and the category. Now let's compare the trailing returns. On comparing the trailing returns for 3 years, 1 year and less, it is seen that the fund is able to beat its benchmark and category average and also with a good margin. Now let's also check the calendar returns and see how consistent the fund is in its performance. On checking the calendar returns for 2020 and 2021, it is very evident that the fund has outperformed its category and benchmark for both the years. Now let's also check the performance for the first 3 quarters of 2022. Here also, if you see, the fund has outperformed in 2 of the 3 quarters of 2022. Hence, from the calendar returns, it can be concluded that the fund is quite consistent in its performance. Now let's see the upside and downside capture ratios. The upside capture ratio, here the value is 100, which indicates that the fund outperformed 0% more than the index during the rise period. Here, higher the value is better and should generally be more than 100. The downside capture ratio, here the value is 68, which indicates that the fund declined 68% as compared to the index during the fall period. Here, lower the value is better. What investors should do? First, the existing investors. The fund has been performing quite good since its inception, and so I feel existing investors should not worry and continue their investment in this fund. But keep an eye on the fund's performance as the fund is quite young and does not have much past records. Second, the new investors. One can start a new investment in this fund as its performance is quite good. But if one is ready to take more risk, then can go with Quant Small Cap Fund also.